want to explain something very, very interesting. Right, same thing with what we did the other time, but this particular one I'll be using this pair, this fix 75. And take note, I told you guys that for the sake of that course we're doing, for the sake of this free for the bootcamp videos I posted, the 10 days challenge we did, I told you guys I would just stick to that one pair. But now we're done, so we're done with that one. So subsequently, I told you guys I'll give you guys particular trades that maybe I took, or trade that actually meet up all the checklist from our previous video. So on this particular video, it will be similar. It will be something like the other one, the last video we posted. So I will just want to just go straight to the point to just show you guys using that same system. Now, if you remember, I give you guys a checklist. If you guys remember the checklist. So the checklist, if I remember, the first thing on the list, you first of all find, what the trend is. After finding the trend, after finding the trend, you find your zones. After finding your zones, you wait for the pullback. After waiting for the pullback, you look for reversal chart pattern. After seeing the reversal chart pattern, then the next thing I think is now to look for an entry. Yeah. So I'm just saying off heads, because it's something that I'm used to. I know before I get any trade, I must look for my important points, down my zones that I'm actually interested at. So now this, I would want to just explain something, but I might do something very, very different from the last one, but it's same sequence. But this I might step down to 4 hours to still mark my zones, because we can mark our zones even from 24 hours, 8 hours, 4 hours, 2 hours, even 1 hour, depending on how you can make use of. Just know a structure. Once there's a break of a previous point, you're expecting a market to come and bounce back there and then continue to the opposite direction. So it's just the same sequence. After a break of structure, there will be a pullback and then there will be a continuation. Breakout, it will rally to a point that is market giving you a directional bias that it have broken the previous high, it have gotten to a particular high. What do I mean? I mean something like this. Market was going like this, and then market breaks this high, then it will tell you that I want to start going up, but it gets to a particular level and then it starts coming back down. You now anticipate this point, so immediately, sorry, let me take this one out. This is what I wanted to draw. So market coming down like this, and market breaking this point, then you're anticipating it to come back and bounce and then push up. So you're expecting your TP level should be at least here, first TP level here, expecting the market to come and then pull back on this point. So whenever there's a break, you're waiting for a pullback. That's basically what you're doing. Whenever there's a break, we're waiting for a pullback. So but for this one, we can just extend to just get other points that actually makes that zone to be a strong point. That's just basically what I'm showing you guys, right? So now this pullback is when you now go to 1 hour to now check for maybe a chart pattern, just to be more conservative. There are other models I make use of that I can get an entry instantly from down here, right? If it's in line, if my checklist for that one is in line. But for the sake of this system, this model I give you guys, this is what you should just focus on. Just wait for the break, wait for a pullback, look for the reversal chart pattern on the 1 hour, and then get an entry. As simple as that, right? Very, very simple. It might look maybe difficult at start, but I bet you when you do it once, twice, I bet you it will be very easy. So for this one, I said I'll be using the 4 hours. I can even step. Let me see if I can just use the 8 hours. Okay. Perfect. I can use the 8 hours. So here I'm seeing 1 point. I'm seeing 2, 3 points. Right. So that's still a good zone. This other one I'm seeing here. So here too is a good zone because I'm seeing 1, 2, 3, 4, 5, 6. So that point is a good zone. So look in between this point, you're saying good strong point. I just love this structure, this behavior that all happened here. This is basically what I was telling you guys, how that market was going up, coming down, higher highs, higher lows, higher highs. It's changed character, started from lower highs, lower low. It bounced back to the zone, came back, it broke the zone. It bounced back to the zone and then poops decided to go up. So that's just simple structure formation. So but if you notice, maybe you might be like, but this trend is down, why am I anticipating an upward movement. The reason why I'm anticipating an upward movement is because from this side, these markets have given me what looks like a double bottom, though it did not really get down to this neckline to bounce back, but it gave us a good double bottom formation. So the very moment it gave us the formation, I knew that okay, this market is trying to start. Like if you remember what I told you guys about knowing when the trend is about changing, right? So when you see a vertical chart pattern, it's still valid too. It's still valid too. The market might still continue going down again, because I would want to see it break this high before now finally know that okay, truly the market want to start going up. Once it breaks this, then I'll know that okay, true, this thing is a very strong the reversal, the trend has changed and it wants to start going up. But even with using these internal formations, I can still use to say okay, I'm waiting for still a buy here. So if you look at it from this point, let me draw my trend line. Let me draw a trend line from this point to this point here. Let me just connect this. So anticipating, like okay, one of the main reasons why I'm actually looking for a buy here too is this, right? But this now is me trying to trade against this trend. But yeah, like I told you guys, with time you guys can really trade against the trend too. But for the meantime, just stick to the trend. But I'm just trying to explain something here. So this market, I saw something like a chart pattern forming here. Here, this point, I saw this sequential movement downward here, and then let me clone this and see. So it was giving me like it was giving me what we call the flag formation here, right? We're seeing the flag formation, and measuring the distance for your flag formation will be from here to this point, and then you measure it from this inner the low to this point, so it will end up coming to this high here. So I'm expecting this market, after I saw the break, the retest, I'm expecting the market to get here to complete the flag movement. But now take note, I'm just trying to show you guys where I'm anticipating the market to go. But that does not mean that was where I'll put if I want to put my TP there, that would be like a swing trade. I'll hold it for long. But with what I told you guys, you are concerned about getting your 1:2 and then you're out, right? But if I see a chart pattern like this, I can still then tend to hold my market, right? And then maybe open different several positions with different TP levels, right? And then hold it. But for this one now, I just mapped out all these points, showing you guys just a clear chart and where you can tell where this market is going to. You can tell. You'll be like, okay, there's one other zone here. You see one zone here. It's still fine. Yeah, you can still market. You can still market, right? It's still very, very, very okay. You can still market because we're still on 8 hours. So this market now, perfectly like this. Now, but take note, there was something that I saw here. I saw this point. I saw this whole point. I saw a double bottom. And now don't forget, this double bottom now is still like on this zone, though 1, 2. And this one now completed the double bottom. Now, but we will not call it double bottom, not until we have seen a break of the neckline and then a retest. And eventually, it gave us a break and a retest on the necklines. Here is the neckline. Let me make this thing darker. Let me see if I can make it darker. Okay, yeah. So we saw. Should I use, let me change the color to, let me see, color green. Yeah, so you guys will see what I'm doing. So the market, this was the neckline, right? So the market went up, bounced on this neckline, which is still a chart pattern. And you remember how I told you guys to get entry? You come down to what? To 1 hour, and then you wait for what? This particular market, it gave us a good breakout retest. So I told you guys you can still wait for the market to tap on the trend line and then move, or you can wait for it to just tap on the neckline that it retested on. It's still fine, depending on which one you want to use. It's still fine, but the more you practice it, the more you now understand how it works and how you can make use of it. So this one now, there are 2 ways to go about this, right? There are 2 ways to go about this. You can make use of this point as your neck. This is the retest of this double bottom we are seeing here. We saw from the 4 hours, 8 hours, even from the daily, you saw it. So we are waiting for the market to come bounce on it. So this is a pullback. The moment we saw it bouncing, coming down to this trend line level, wait for this first guy, which is first bullish. The second, the candle that breaks above it, with the body, this then closing above. So this is the one we're making use of. This stop loss, don't forget stop loss, look for the next reasonable low here, which is this point. So TP level 1:what? 1:2, right? Minimal 1:2. But with what I showed you guys now, you can still make use of this point, because I'm expecting this market to come and touch this significant trend line, this external trend line that is trying to show us that the market is trying to go make touch there, should now continue going down because of this flag that we saw here, this chart pattern here. So though I will expect it to come to this zone, if it comes, once it comes to this zone, but it have gotten to our TP already 1:2. But this is me trying to hold it, wanting it to come to this high, at least this pullback and this retracement high here, this swing high, this point here. I'll wait for it to get here. Remember when I taught you guys, I said you can just make use of this. Okay, yeah, so this is where our TP is supposed to be because of the swing high, like what I told you guys from the previous video, right? So if you want to just get 1:2 and go out, it's fine. But I told you guys that sometimes making use of this swing high point is very, very, very important too. You can just put your TP there and then with this particular market now. I told you guys, if this swing high is not giving you up to 1:2, you should just adjust to make it 1:2. But sometimes, like for this one now, it's up to 1:3, so it's a good one for you, right? So this market is giving us a good 1:3. And then if you want to make use of the flag or the next zone level here, this is a TP level, but you just take note, and then here is the final. So but once the market is getting to the zone, you take note of it. One of the reasons that you know that okay, this market is trying to turn is when you're saying it's giving you what, a versatile chart pattern, be it the head and shoulder, inverse head and shoulder, or head and shoulder inverse, whichever of them. If you're looking for a sell, you are waiting for head and shoulder or double top. If it forms, you are not just entering from there. You wait for it to break the neckline and retest, and then that's when you get an entry. That's you trying to be more conservative, right? Being more conservative. So if you notice this market, the market played out and the market is going well, and it's good, right? Giving us what we actually wanted. So this was me trying to break this market down for you guys, and yeah, as you can do well to practice on this particular guy, do it repeatedly. Like you can watch this particular video again and again and again, and I bet you the more you do it, the more you tend to now see that this thing is not even one hard stuff. It's not really as difficult as it seems, right? That people make it look. Once you are seeing structural behavior, break off a high, a low, a point going up, coming down, support on resistance, you're not just entering from those points. You wait for the market to give you an indication, like telling you that okay, market want to have broken a point, it want to go to a particular height. Then this point now, you're not just saying you want the market is breaking to bounce back on this point. No, once it's bouncing, you wait and see if you're seeing a reversal chart pattern. When you see it, that's one indication that okay, truly, okay, I want to turn to a particular direction. But you're not just jumping in. You wait for it to break the neckline. Once it has broken the neckline and bounce back, and then you use your 1 hour candle close of the bullish candle or bearish candle, depending on which direction you're anticipating the market to go to. So you use it, get your 1:3, 1:2. So if you are using the swing high, then you can, if the swing high is up more than 1:2, then it's fine, you're good, right? As simple as that. Just try to do this repeatedly, and I'll do more example on this on different markets. So I'll just show you guys that it works on all markets, right? Because the structure just previous high, previous low, like it works on all market. Then with time, then when I would want to give you guys maybe advanced structures and advanced way I get entries, because this particular market, I think I got an entry quite early. I think it wasn't from this point, from this high here. I think it was around this trend line. Yeah. So I will show you guys how to get good and clean entries, but for now just stick to the structure, and this market is very, very powerful. It's something that works repeatedly. We can check on other pairs, like the previous video we did, I made use of VIX 25, this VIX 75 now, and it's still giving us the same similar movement. So let's say, for instance, we're trying to go back and then check the structural formations here. You'll notice that, okay, let's mark zones here. We're saying here, we see this point 1, 2, 3, 4, 5, 6. We're seeing all these points, so that point is very strong. Let's say we marked here again this point. Let's now say we are trying to go check for entries on this point. So you go down to 1 hour, you wait or check either of these zones that you've marked. Are you seeing maybe any reversal formation there? Okay, any of these zones. So what we saw here, this is like a triple bottom here. So using 1, 2, 3. So you mark where the neckline to wait for a bounce. So here is the neckline. You wait for a bounce. You look for what? 1:2. 1:2, right? Then where are you getting your entry from? See the pullback. See the first bullish candle. See the next one that broke above it. Stop loss here. Trade a clean 1:2. That's as simple as this. I just look for a good. This thing is just very, very. I might not say. I don't want to say it's simple. It might not look easy for you at start because you are just maybe starting. But this concept, you can go try it. Try it. Like I told you guys, it's not by what I'm teaching you, right? It's by what you do with it. It's what you do with what I'm teaching you that will determine if you'll be profitable. Not just that you have gotten knowledge and then no, you need to practice it and then make it part of you, right? To be able to see the money is trying to play out. So you check here again. Where's our next zone? When did the market get to the zone again? Here. We got a point. Like I told you guys before, not all trades might go, but if it goes, it's fine. And now I told you guys that this trend, don't forget, the trend of this market is down. So we getting a buy is we trading against the trend, and it's risky. And I told you guys that if you want to trade against the trend, you'll be ready for whatever it brings your way. So this particular market, this point 2 is a strong zone. If you mark it from our 4 hours, this point, let me see it from the 4 hours. Let me just mark it. Yeah, it's suspected here. Alright, then back to 1 hour. Then we check this. Now don't mind the way my chart is looking. Because I'm explaining this, my chart normally wouldn't have all these points. I'm concerned about the main point where the market is at, the structure that's forming there, and then this is just wanting to just catch a 1:2 movement. This is one of the most easiest way you can do that. So have you seen any reversal pattern here? The market gets here, came back up. So you might say you saw maybe a double top here. Let me see this point here, see the neckline here, this up here, and then the market came back, bounce. If I enter here, SR will be above here. You look for 1:2. So this next bearish, the next one breaking this, but this did not break this low. This one did not break. The next candle did not break, so we are not entering from this point. So we waited this, then our entry will be around here. SR will be above this point or above this point. Two of them, but make use of the next reasonable high. So we use that high, and then 1:2 what? 1:2 like always, right? And then yeah, you're good. You wait and check for the next point here. Here I want to really, it's not really that clear, like it's not really perfect and double top formation, but it's not really, it's still good. It's not really bad. So make use of this point as the neckline. You wait for the pullback there. The market gave us this, the first bearish candle, the next that closed below it, which is around this point, entry here, SL above here. So if you notice the way I'm putting my SL on this is looking different. That's why I'm telling you that I just a little trick from the previous video on this. So 1:2 here, 1:2, and yeah, you're good. So you check the next point. Here's the zone. The market broke out this point. The market broke down here, went up, tested here. So I'm seeing something like a head and shoulder here. Where's the neckline? Here's the neckline, this point. So the moment the market came back down, you tested, because you always wait for the pullback, the bounce back, the pullback, the retest, and then the continuation. So these are the one. please, you can just practice it again on your own. Just practice. Go open the chat. Just look at it. Just look where there's formation of structures like this. Join it, link your zones, and then look out for all these stuffs there. So here, the first, second, okay, see the one that closed below. So my entry will be here. SL level. I would want to use the previous high or low that's here, but even above this zone level, I would not want to use this. If you notice, most of the trades have been entering, the SLs have been above the zones level, above this point, above maybe the neckline we marked, above it, right? So I won't want to use. If I said I want to use this, is very high, so I will just use this internal one here, this one here. So my SL will be above this point. I'm looking for 1:1. 1:2. Let me see if this gives us 1:2. Though this SL is quite big, I would like to use quite big. So this is about trade, you run from it. Alright, if your account is not that good, just run from it, right? Run from it. So this did not really give us up to 1:2, which is fine. It's part of the game. I did not. If we made use of just this low, this recent low, which is very okay, but we are sticking to 1:2, so it did not really get to our 1:2 level. It did not get to our 1:2 level, so it got to like 1:1.5, and then started going to the other direction. So that's it. So the next zone we are looking out for here, okay, we're looking mostly for sales trades. So the next point here formed like this one is still together with this point. So what the market formed will go ahead and show that at this point, though it might not be looking that clear here, but this is it. This is the hair coming down, going up, coming down, coming back down, then break. So where the neckline, here the neckline, this particular point here, here. So where is my entry? My entry will be the bounce, the pullback, then the one that closes up or below it. First bearish candle, second bearish. So my entry will be around this point. SL will be this high here, and then my CP level 1:1. 1:2. So yeah, this is basically it. Here I'm seeing the double top here. Double top here. There's a neckline here. There's a neckline. Here's the neckline. Here's the neckline. Market coming, the first bearish candle, second, yeah, this one entry here. That's above this high. CP 1:2. So yeah, I'm even tired of looking for this stuff because it's just everywhere. You can use a double top, use here for entry 1:2. There's nothing here. Head and shoulder, then the neckline, though the market did not come back to bounce, it is still fine. So you can just look, you can see how that we are getting good entries, like we're getting good entries. So this one here, you can see, you can call this let me mark this. It's here, you can call this head and shoulder. You can call this the head and the shoulder. Where's the neckline? Here's the neckline here. Then what are you waiting for? You're waiting for the pullback on the neckline, right? So where the pullback happened around this point. So wait for the first push, second candle that breaks above here, then this. So here, sorry, this. Let me take this off. So this GS over here. 1:1. So and then yeah, just yeah. So you might not always get, some trades might not go your way, but which is fine, right? It's part of the game. So so just using all this, we got one trade here, two trade. This they don't get to TP level. Let's count how many. 1, 2, 3, 4, and then we got 5 here from this push. Inside 5, just one did not go as planned because it got to first TP. It did not really sorry, we are just using one issue too, so it's not like first or second TP here. So this did not get over TP. It got to 1:1.5 here. It gave us up to 1.6, just 0.4 to complete it to 1:2, but it did not, so which is still fine. It's part of the game, right? Sticking to your plan, right? But the time when I started to show you guys how explain how what shift to break even, the moment market is getting to 1:1, then you shift to break even. When I subsequent videos, I will explain that for you guys. So yeah, this all for this particular video, right? So do well to watch it, go back, watch it repeatedly, watch it again and again and again and again and again, right? Until you understand what it's all about, right? So when next we meet, right, I continue to remain fair and forever and stay safe, right? And God bless.